Hello everyone and welcome to your Onchain update for the 7th of February. So after a pretty spectacular rally, Bitcoin appears to be taking at the what seems to be the first breather in at least a month. January was obviously a pretty powerful month at that, so to take a bit of a breath is okay. I mean, I'm seeing it down at 22.7 at the time of recording. And I mean, look, a lot of this kind of stuff really does give me vibes of 2019. When I look at the data, even though I wasn't around at that time, 2015 has a very, very similar vibe to this, where you kind of get these. I mean, in the 2019 context, the market pulled up from, 4K to over 14K in 3 month period. And I will never forget that because it was the first time that I was struck with a, wow, I did not accumulate enough Bitcoin. I'd finally gone down the Bitcoin rabbit hole. It was kind of a wake up moment for me where I just, it was the first time that I saw a market just want to run and it gave no pullbacks. It really took no prisoners on the way up. Now, the follow-on effect from that, and something that so I'll never forget the feeling of, wow, I didn't accumulate enough at the lows. And then I will also never forget the buying at 14K, buying at 12K, chasing this thing up, and then going through another bear market through most of 2019 and 2020. So this is a long and arduous, painful process to get out of this thing. One thing that I will say, however, is that process of learning about Bitcoin back in late stage 2018, after I'd lost 90% 6 times, and then finally feeling that, oh, I didn't accumulate enough, and essentially that 2019 phase was quite formative for me. I spent a lot of time studying, a lot of time understanding. It was a high conviction period, despite the fact that prices were trending lower. It's very much an educational phase for me. So anyway, that's just a bit of context. So sometimes, I find some people do tell me that it's useful to just hear stories and anecdotes like that. But anyway, within the context of the current market, I remember it just not giving any pullbacks during that 2019 rally. This has a bit of the same energy, if I'm perfectly honest. And there's several metrics that we looked at in the last video that was very much about these oscillators getting to kind of an equilibrium point, being at that 50% level. That all remains. What I want to look at now is a bit more shorter term, what's going on with this breather, and also just do a bit of a touch on this whole Ordinals thing, which is kind of interesting. I'm still getting my own head around it, but overall, I'm excited. I think it's great. It looks awesome. Anyway, let's jump into it and get into the data. Okay, so as many of you will know, I'm a huge fan of on-chain activity, both in bulls and bears, because what we're looking for is, does the market have some reason to exist, right? Do we have the momentum following through to actually justify the market moving? So the first one that caught my eye was new address momentum. So this one here is kind of interesting because quite clearly this is a bounce up and then an uptick. And it actually looks quite similar to our phase back here in 2019. Late 2018, early 2019. So we've got this uptick in momentum. This is great. So this is on a new addresses. And there's going to be, remember that those addresses have no payload to them. It's important when you're looking at on-chain data to understand payload. A new address could contain one sat, as is the case with Ordinals. A new address could contain Michael Saylor level 100,000 coins. So a single address is kind of meaningless. We have to then assign volumes and realize profit and loss, but there's some metrics that do have that payload and some that don't, and we use them in combination to get a bit of a full picture. So the first one is new address momentum. This is nice. I like that we've got a bit of an uptick here. This is actually quite good to see. Now, because we also have the joy of having T3 data here, we're looking here at the new entities. So the new entities is a cleaner version of that, trying to actually bring it closer as best we can as an estimate towards who the actual users, the owners of those coins are. And you can see that we did have a significant burst following FTX. It pulled back to the yearly, and then we have had an uptick from that point onwards. So across both of these, very, very early signs, you can see that the new entities is a little bit softer than the new addresses, and that's giving us a bit of an indication that there's a smaller cohort of people that are actually participating here. So again, not really kind of the stellar runaway bull market just yet, but significantly better than where we were, 3-4 months ago. So things are improving. Things are starting to evolve in the right direction. This is good to see. One that I did like is the number of addresses with a non-zero balance. And we've got a nice little uptrend here. This is good. I like the fact this is starting to tick higher because new addresses with a non-zero balance is just a really nice proxy for activity. And remember, the absolute value of this metric really doesn't matter anywhere near as much as the trend and the gradient. So maybe let's go on a 1 year basis. The gradient is accelerating higher. That's great to see. During this bear market phase, as we had our June collapse and then FTX, you can see that we had a bit of a stagnation, right? For every new address, there was one getting destroyed. So we kind of had this stagnation. FTX inspired people to take custody. There was also a phase of, in fact, this wasn't capitulation. This was actually Binance reducing a bunch of their wallets. This was actually demand. But you can see that this uptick and this uptick, nice little gradients pointing higher. Good to see. Really, it's actually what you do want to be seeing at this point in time. Now, on the transaction volumes, this is where we start talking about payloads, right? Addresses are all well and good, but are they carrying any economic weight? So this particular model here in the red is looking at large-scale entities. It's the mean transaction volume. This is just a sad, sad display. We'll see a lot of things like this in terms of transaction volume. Essentially, and I've actually gone through a bit of a study for this. This is mostly FTX Alameda. They were churning a epic boatload of scammy coin transactions on all chains. So there's a lot of bloated volume across all chains, which has essentially been completely flushed from the system. So we are now looking at a true baseline. Note in the blue, this is retail level size. Fairly stable, fairly consistent. When we're looking at institutional size wallets, massive decline. That is the purging of the scammers. And man, it feels good. We're getting all these folks out of the system, and we are now back to a true baseline behavior. Love to see it. Painful as it is, love to see it. Now, getting a little bit excited about the whole Ordinals thing, here we are with number of transactions, really, really nice uptick. Usage is good. Bitcoin is getting some activity. People are excited. .eths are spinning up Bitcoin nodes. It's love to see it. It's fantastic. So we're going to talk a bit more about these Ordinals in a second. And again, I'm coming at this from someone who actually doesn't have a snowball's chance to hell of understanding the actual technicals of it. But if we look at transaction count momentum, beautiful push higher. This is fantastic. Love to see it. Highest level we've seen. I mean, I'm going to say since the bull market ended, which is not a half bad result. Entity adjusted transaction count, equally impressive. Pretty much back to the crossover point that we had that started the bear market. So this looks like, I don't want to say the word, but it looks a little bit like a recovery. Remembering that the recovery in 2019 took a whole year and we revisited 3,800. So keep all that pain that could come in mind. I like what I see. This is fantastic. And you want to see these networks come back to life. You want to see them be fun. You want to see people wanting to transact. And this Ordinals thing is kind of a really neat way to jump into that. Transfer volume. This is the one I was talking about. This thing is just collapsing off a cliff. This big bubble here. You can kind of see there's like a big hole. That's Alameda and FTX, right? That is the size of how much these guys were churning through the system. So when we talk about inflated volumes, this is bull market. This is a lot of skullduggery going on, and that's the end of it. It's great. It's good to see. It makes some of our charts look nasty and wonky, but if we go to our entity adjusted volume, this is going to be much, much cleaner. Note this big kind of inflated bulb. This here is our change adjusted variant. So this one here is only using kind of industry standard heuristics to take out change volume. This huge bubble, this sustained bubble. Note here that in the bear market, really, since the start of 2022, this is late January, we can see that everything is in a downtrend. The yearly, the monthly, the whole lot on entity adjusted. With change adjusted, this thing persisted just about through till FTX blew up and then it blew up. So this is all just scammy inflated volume. Sucks to see, but that's pretty much what we're seeing. Now, even on the entity adjusted variant, in terms of payload, we do not have the volume. So think about this. We've got transactions, we've got addresses. We don't have the volume follow through. We've got retail and shrimp. We don't have institutions. This is giving us kind of a bit of a field of play of who's here, what they're doing, and just a bit of a scope, understanding who's here and for what reasons. And just to give you a bit of a scale here, this is the RVT ratio, and I've just got here which trend it's moving in on a 28 day, I think. 28 day, so more or less a month. And look, the RVT, as you can see, this is the impact of Alameda. This is how much they inflated volumes, in the sense that when that transaction activity dropped off, because everything's measuring over a 28-day period and it's all relative, this thing is just cratered. Well, risen. It depends which way you want to flip the ratio. But in this instance, we do have the start of a downtrend, which is good to see, right? So it is at the very least in the process of recovering. But what this is telling us is that the amount of transaction volume is very small relative to the market cap, or to the realized cap. So market size. How much volume is it putting through versus size? Very, very small blip in terms of transaction fees. We'll talk about this a bit more. So far, we don't really have fully congested blocks, but I'll tell you what, it's starting to get there. Now, Taproot and Ordinals. So I'm excited about this. This is a really, really interesting, neat thing, right? So what we've basically seen is we have what they call ordinals. Each Satoshi has a serial number, which the Monero folks are going, they're having a field day being like, look how not fungible Bitcoin is. Each sat has a serial number, to which I say, yes. And so what's going on is people have found a way, within the Bitcoin transaction data, there's kind of the signature or the witness data, which is treated separately following the SegWit upgrade. Anyway, some smart cookie has found a way to put data, whether it's a JPEG, or I've seen Doom has been inscribed onto the Bitcoin blockchain. Someone has found a way to put and assign a packet of data to a Satoshi. So each Satoshi can be assigned a set of data. So the ordinal refers to which Satoshi, the Satoshi number, and the inscription is the thing that is being put into that Satoshi, or ascribed to that Satoshi. Now, first things first, inscriptions and ordinals are so much better of a name and a brand than NFT. I to this day will never understand why a creative bunch like the crypto crowd chose NFT, short for non-fungible token. No normie's going to understand what an NFT is. Now, ordinals and inscriptions, they sound historic. They sound important. They sound really neat. And the other cool thing is that NFTs, as they stand on most blockchains, are essentially a individual token, typically part of a set of other individual tokens, the collection, so to speak, with a URL pointing to some other blockchain or some other data, IPSF or whatever it is, with the image there. Inscriptions are on Bitcoin. They are inside the blockchain. There's no URL. There's no, oh no, FTX went down, so my NFTs that they minted are dead. No, this stuff is on the blockchain. Now, there's, it triggers maxis, which by the way is generally a good thing. Triggering maxis is a favored pastime of many people. There's a way to do it, but essentially, this is going to create larger blocks. And my long-term argument here is saying, well, we all agreed. I wasn't there at the time, but if I was there, I probably would have agreed. Social consensus and the consensus rules of Bitcoin, when we put SegWit in, are 4 megabyte blocks is the maximum size. Now, we can only reach that when the witness data is very large. Most blocks are around 2.3 megabytes or thereabouts. But now that people are putting inscriptions inside the witness data, we can get to 4 megabytes. Well, if it was 4 megabytes of transaction data or 4 megabytes of JPEGs or 4 megabytes of whatever, we agreed that was the block size limit. My node can handle it. You can prune it. There's all sorts of, in terms of block size management. So all of these things, go nuts, right? And if Bitcoin can't survive a bunch of people putting JPEGs and Doom on the blockchain, then it deserves to die. Bitcoin is a hardy animal. It's going to be just fine. A couple of maxis feelings are going to get hurt, and they will have to just deal with it. So it's going to push up block space. It's going to help fee revenue. It's giving Bitcoin something to do. I know there's going to be smart guys who come in here and go, what else can we do with these ordinals and inscriptions? Bitcoin just got a new playground, and if I was any other chain, I'd be shaking in my boots. So as a result, we've seen most of these ordinals, or I think all of them, are using Taproot. Taproot adoption, exciting stuff, right? I love seeing parabolas, especially when it comes to fundamental data. This is fantastic. You can't be mad at this. This is great to see. This is the number of spent outputs that are using Taproot. Again, just love it. Beautiful stuff. I mean, seeing parabolas in fundamental blockchain properties, I mean, you can't pay for this. And this is on the big beast, Bitcoin itself. So really, really pleased to see it. I think Ordinals are going to open up a whole bunch of design space. I think it's going to create excitement. I can't wait to see these, inscription markets and things start to open up. This is really cool. And you know what else is really cool about this? It brings Satoshis to the foreground. And perhaps, just maybe, this is the opportunity to go Sats the standard. And then you break down the numeral bias, right? People get excited about Sats rather than, oh, I only have 0.0001 BTC. No, you've got X amount of Satoshis and they've each got an individual thing. It's just, the whole thing is fantastic. I love it. It's really good to see. Yeah, exciting stuff. Right, getting back to the action, just to kind of close out this section. So in terms of the on-chain activity, we've got the non-payload metrics giving us a thumbs up. Fees, transaction volumes, not yet. So there's another way to look at payloads, and that is realized profit and loss. You all know I love this type of topic. I think it is the most important thing when it comes to finding edge in this market. It's full of it. In terms of scale, this is realized profit and loss. We have had an uptick, right? Just visually, you can see this tiny little green splotch over here. That is essentially an uptick in profits. Profits are up, realized losses are down. But in terms of scale, it doesn't really stand out. It's not the most exciting thing, which to me kind of indicates that we're like very, very early. There's just not much being moved around. Now, when you have very small realized profit and very small realized loss, it's nice that it's more profit because that's showing that there's people taking profits. Someone's making money. When someone's making money, network effects start to grow. Bull markets are generally a product of people making money. But the scale of it is small, which means that the coins that are on the move were kind of recently transacted. We're not talking about all-time high coins. We're not talking about Satoshi's coins. Coins that are moving, they've got a small payload. It's not really coming from, back here in previous bear cycles and all that stuff. What that has done is pushed our realized profit loss ratio into the green. Now, this thing here, typically as it trades, this is a nice, clean, significant break. Gives us an indication we're probably in some kind of a market structure change. We've seen a capitulation and a major washout. You can see the scale of it. Here's your washout of capitulation losses. Washout, capitulation losses. Whoop. Suddenly we're not quite in a bull, but we're also not quite in a bear. Right? We're in a transitional period. And this is why there's a lot of metrics really telling me that we're kind of in this 2019, 2015 kind of evolution transitional state, which I'm not mad at in any way. A SOPA, holding and bouncing above 1. This is good. This is what you typically see around transition points and, dare I say, some kind of a bull market rally. So I'm not mad at seeing this either. Short-term holders. Coming back for the retest. We're coming in for a bit of a decision point here. I would love to see this bounce and rally. So you can see it gets rejected all through here. These are people selling to get their money back. A nice retest of 1 would indicate that we've got a bit of that positive sentiment coming back in. Long-term holder SOPA. Maybe just zoom in on a slightly smaller time frame here. You can see here the scoop around starting to trend higher. The scoop around starting to trend higher, scoop trending higher. They are still spending coins at a loss. The vast majority of long-term holders are in the last cycle. They are spending, but their losses are getting smaller and smaller, partly because price is rising, partly because it's just not that many left of them. So what we're seeing is that long-term holders are getting to the point where we're starting to move back towards profit. The average long-term holder that's spending is not locking in a profit. So therefore, it's basically people still just like taking the exit liquidity, but it's not really... we're seeing profits getting taken on one side. Long-term holders are still getting flushed out on the other. It's kind of what you see towards these transitional periods. So the last thing I want to touch on is 2 metrics, realized RVT and sell-side risk. I'll start with sell-side risk, actually. Both of these metrics take realized profit, realized loss, glue them together, right? Absolute value. So if we've got $1 million of profits and $500,000 of losses, we've got 1.5 million of total realized value. So how much payload was actually moved between when a coin was acquired and disposed of in aggregate? The sell-side risk ratio divides that by the realized cap. How much value change happened on the Bitcoin network today divided by market size, right? How much change versus size. Very, very low values mean that there is basically you've flushed everything out. You're at a turning point, low volatility. The spending that's going on is very small. It's mostly just like recently transacted coins, kind of waiting for something to happen. High values, like bull market tops, like capitulation events, like FTX, these higher values means you're getting a flush out, right? A capitulation style event. The bull market is on, the bear market is on. We're talking about like major transition points. So low values, good example, right before the 50% sell-off here in November 2018, and right before the rally to 14K in April. Right before our 2021 bull market, right before FTX, right before our recent rally. So these are typically transition points. High values and low values typically give us cycle transition points, and it looks like we're in some kind of a it almost looks textbook 2019 style transition point. Now that compared the realized value to market size, market cap or realized cap. This one here is comparing to transaction volume. So how much coin was flowing and how much payload did that relative to the transaction volume did it follow? Very, very similar behavior. Right before FTX, most of the transaction volume was just kind of daily chop. There wasn't much realized value happening. During FTX, most of the transaction volume was puking out massive losses, or people from way back in previous cycles panicking and saying, get me the hell out. I'm taking profits, but I just need to get out. Here's the market peak. Here is the pre-bull. Here is the November 2018 sell-off, March 2020. These two models, high and low values, are typically happening around cycle turning points. Extreme value realization, complete apathy. Extreme losses, complete apathy. So these things typically happen around cycle transitions. So when I kind of look at all this stuff in context, where it feels like at the very least, the bear market of 2022, psychologically, in terms of ownership structure, coins changing hands, behavior patterns, we may not be out of the bear, but I think the 2022 mindset has probably changed. I think the cycle has probably changed. I think we're in a transitional period between whatever the previous cycle was. In my book, it's actually that sell-off back here in 2018, that sell-off all the way through to FTX, that's the cycle. That was kind of the market cycle. You could potentially argue that March 2020 to FTX is kind of that cycle. Nevertheless, my view is that that cycle has probably finished and we're now in something new. We don't know what comes ahead, but the human beings that are in this market are different. The behavior patterns are different. The opinions are different. And to be honest, you kind of love to see it. So we're in a new world, and it's going to be exciting to kind of analyze as we move forward. But anyway, hopefully see you in the next one. Talk to you then. Cheers.